Welcome to Explain the Charts, where we break down the news and chart data to help you make better trading decisions. Today, August 27th, 2024, we're diving into the USDJPY pair, which has been experiencing a lot of volatility lately. Let's start by looking at the current news surrounding the Japanese yen. Recent reports suggest that the Bank of Japan, BOJ, is considering a shift away from its ultra-loose monetary policy, potentially leading to a rise in interest rates. This news has caused a lot of speculation in the market, as a rate hike could strengthen the yen and make the USDJPY pair less attractive for carry trades. The BOJ's decision will be heavily influenced by inflation data, which has been trending upwards in Japan. If inflation continues to climb, it could increase pressure on the BOJ to take action. Another important factor to consider is the U.S. Federal Reserve, Fed, and its expected rate cuts. While the BOJ is considering a rate hike, the Fed is expected to lower interest rates, potentially putting downward pressure on the U.S. dollar. This creates a complex scenario for USDJPY, as the two main central banks are moving in opposite directions. Now, let's look at the chart data to see what the technical indicators are telling us. On the daily chart, we can see that USDJPY has been in a long-term uptrend since early 2023, but it's recently encountered resistance around the 146 to 147 range. This resistance level has been holding strong, suggesting that the bulls are having difficulty pushing the price higher. The recent price action shows a slight downward trend, with the price closing below the previous day's low on several occasions. This could be a sign that the bulls are losing momentum and that the bears are taking control. However, it's important to note that the daily chart is still showing a bullish signal, with the price remaining above the 200-day moving average. This indicates that the overall trend is still positive, but the recent bearish pressure suggests that the uptrend may be nearing its end. It's crucial to watch this level closely, as a break below the 200-day moving average would be a strong bearish signal. Let's switch to the hourly chart for a closer look at the recent price action. The hourly chart provides a more detailed view of the current situation. We can see that USDJPY has been consolidating within a narrow range for the past few weeks, with support around 144.50 and resistance around 146. This consolidation could indicate that the market is unsure about the next direction for the pair, as both the bulls and bears are battling for control. The recent price action is showing a slight bearish bias, with the price closing below the previous hour's low on several occasions. This could be a sign that the bears are gaining momentum and that the pair is likely to break lower. However, we can also see that the hourly chart is showing some bullish signals. The price is currently testing the support level of 144.50, which could provide a bounce back to the upside. This is also supported by the fact that the price is holding above the 50-hour moving average. It's important to watch this support level closely, as a break below 144.50 would be a strong bearish signal and could lead to further losses. Let's shift to the 15-minute chart to see if we can identify any shorter-term trends. The 15-minute chart provides a highly granular look at the recent price action. We can see that USDJPY has been experiencing a lot of short-term volatility, with rapid price swings in both directions. This high volatility makes it difficult to identify a clear trend on this time frame, but there are some interesting patterns emerging. The price has been bouncing between support levels around 144.50 and resistance levels around 145. These levels are likely to be key areas to watch for potential trade opportunities in the near term. We can also see that the price is currently near the middle of this range, which could suggest a potential breakout in either direction. If the price breaks above 145, it could signal a resumption of the bullish trend, but a break below 144.50 would be a strong bearish signal and could lead to further losses. It's crucial to monitor the 15-minute chart carefully for any signs of a breakout, as this could provide a valuable trading signal. Remember, short-term trading requires close attention to the charts and the ability to react quickly to changing market conditions. In conclusion, USDJPY is currently at a crossroads, with both the news and chart data presenting a mixed outlook. The BOJ's potential shift in monetary policy creates a lot of uncertainty, while the Fed's expected rate cuts could further complicate the situation. On the daily chart, the pair is facing resistance around 146 to 147 and is showing a slight downward trend, but the overall trend is still positive. The hourly chart indicates consolidation between support at 144.50 and resistance at 146, with a slight bearish bias. The 15-minute chart shows high volatility and potential breakout points near 144.50 and 145. Keep in mind that these are just short-term predictions, and the market can change quickly and unexpectedly. It's essential to stay informed about the latest news, monitor the technical indicators closely, and be prepared to adapt your trading strategy as needed. Key price levels to watch include 144.50 support, 145 resistance, and 146 to 147 resistance.